Good morning, traders. How the heck are you? It is Monday, April the 24th, 2023. It's time to start a new trading week. Yes, last week was a very trying week, but very, very successful. Every single day last week, we were able to bump our net lick up, which is ultimately the end game here. So this is our weekly trading preview for this week. Let's get into it. So as you know, with this video, once a week, we give you a little preview into what we're looking at into the markets for setting up our trades for the week in our live trading room. And then we give you a quick review of our performance year to date and as well as our past week's performance. Give you some tidbits there in terms of some of the areas that we're finding success and maybe not success in. So let's go ahead and jump into it and talk about what we're seeing. We do look at the weekly technical matrix here, about 12 different indicators mixed in with some support resistance areas, some Fibonacci numbers, some pivot points, and some moving averages, both simple and exponential. We sort of combine this soup all together here to try to get a overall bias of the marketplace. We look at these indicators on a daily basis inside of our trading room, but here we pull back a little bit, look at the weeklies. The weeklies are still showing buys. We are getting a lot of overstretched, overbought indicators coming into the weekly chart. If you pull down to a daily chart and then a 5-hour chart and then a 1-hour chart, you start to see more and more and more sell signals appearing on the chart. But for right now, we're still kind of hanging in there up very near the top of a resistance level that we've been at and hit for a really long time. If you look at some of the key sort of, I think, key supports, resistance areas, some areas that I think are important in this marketplace right now, there's a couple of things that I'm looking at. You do see that the stochastics have already rolled over and are heading down. RSI was really getting up into that overstretched or overbought range. It's starting to come back down now as well. And we just barely starting to get a sell signal corroboration with the MACD here. That usually lags 1 to 3 days behind the stochastics. And that's starting to kick in now as well. So we definitely are in a downtrend. We've got this rising wedge pattern here that you can see taking place in the marketplace. And we've broken down below that. Most of the short-term action that we've seen this last week has been bearish, in fact, but it's not quite enough to really break through all of these technical indicators. I think if we had another couple of solid days in a downward fashion, we might get there. But, you know, again, a couple things that I think are pretty interesting. This is the 200-day moving average. We're still clearly above the 200-day moving average. The point of control, VWAP, all of these things are below where we're at right now. Those tend to add support to the marketplace. And again, we've been in a sort of trending area here in the marketplace going back almost over a year right now. So we are clearly closer to the resistance level than the support level. To me, that would imply that maybe there's a higher probability that we retrace rather than we push higher. But my goodness, we've been waiting for a really, really, really long time to try to see if we can get something that will break us out of this range. And last week was not that week for sure. I don't know that this week is going to be that week either. Not a lot of news catalysts on the horizon and not a lot of expected volatility this week. We break it down a little bit more to a micro level, 2-hour candles. This is what we base our support resistance levels off each morning as we start our 0 DTE trading strategy. And there's a couple things again here that I'll just note for you, but I think the primary thing is just support resistance levels. I'll give you my levels here for today. This is Monday, April the 24th. If you're looking to the upside, if you're looking for resistance, I would say it would probably be 4160 is my first level up that I'm looking at, 4167, and then 4177 41.89, and then the big one is 41.98. That's the big one right there. If the bulls could break up above 41.98, that's right there. That's that high that we made about the 16th, 17th of April, somewhere in there. That could push us back to more of a bullish pattern. So that's the big number that I'm looking at from a bullish standpoint or resistance standpoint, 41.98. On the downside, as we look at support levels, 41.44. There should be a 1 in there. I'm looking at the futures markets right now. Again, not a lot of action, teeny bit of weakness here. S&P, or the E-minis rather, are down 4 points. The NQs are down 10 points. Not a lot of activity here, but 41.44 to the downside, and then 41.33 on the E-minis. This is a big level for me. I think that that's the first level that I am really focused on more than any other level here this morning, 41.33. I want to see if the bears can break down below 41.33. I think that could give them some potential momentum to the downside. Below 41.33 is 41.19, and then 41.09. That's it, 41.09. And then the biggie, the big one is 40.98. That's the big one on the downside for me as well. We break down below 40.98, which is down in here. And that to me is pretty much look out below. Okay, so those are some of the levels that we're looking at for today as we get started with our zero DTE trading. Again, a couple key things to point out. Yes, the indicators are rolling over. Yes, we're getting some weakness into the marketplace over the last week. Yes, we're starting to roll over in terms of price action. But nevertheless, you can see that all of the major indices that we trade, track, and look at, the SPYs, the Qs, the diamonds, are all above their 50-day moving averages by quite a bit. The IWM is the only one that has had challenging areas there. And boy, you can see, if you ever want to know how big of a demarcation point the 200-day moving average can be, take a look at all of these indices over the last sort of 6 to 12 months. You can see on the SPY here, it's really acted as a resistance level there. What was resistance there became support there. Big area of support in here. Huge area of support for the Qs, for the NASDAQ. The 200-day moving averages have been a massive, massive trading indicator for the NASDAQ. IWM, you can see again what was resistance there becomes support there. What was support there becomes support there. Once we break that, once you break a support resistance area, usually the vacuum is opened and it is off to the races. And you can see that that was a huge demarcation point for allowing this market to fall pretty handedly. The diamonds, you can see again that's a significant area. When people say technical analyses doesn't matter, technical analyses doesn't work, all you have to do is look at the 200-day moving average, and you can see how big of an indicator just using that alone would be to tell you, you know what, when we're above, probably we should be buying, and when we're below, probably we should be selling. So anyway, most of our indicators still above the 200-day moving average. The IWM, a little bit more interest rate sensitive than other things. That's been beat up a little bit here. But until we get back down below that 200-day moving average, I think the bears are going to have limited success here. But one of the things that I have added to our analyses, our weekly analyses here, is looking at where we are with regards to stocks that are above or below their 50-day moving averages and their 200-day moving averages. And one of the things that I think is interesting is that, you know, with these markets really up here pushing in a very, very bullish fashion, and up against these resistance areas and having pushed higher and higher for such a long time, these are not good numbers. These are not impressive numbers. You should have a lot more stocks above. The 50-day moving average should be something like this, maybe like 65%, and the 200-day moving average should be something like maybe 55, 60%. And so we're getting some rotation here. This market has been held up by the techs. It is the techs that have really held these cap-weighted indexes higher. Got a lot of tech earnings coming out this week. It's going to be a busy week this week with earnings. We've got Microsoft, we've got Google, we've got Amazon, we've got Meta. It's going to be interesting. I think those are prime, the ones that I just mentioned. There's others as well, but I think it's Microsoft, Google, Amazon, and Meta are the ones that are going to potentially be the big driving catalyst for this week. We look at year-to-date performance. It is, of course, still the NASDAQ, the Qs that are just absolutely dominating. SPY's not doing too bad. I mean, hey, the S&P 500 is right now on an annualized track for about 25-30% a year rate of return. I think that's pretty impressive. I don't think we're going to get it, and I certainly don't think we're going to get 80+% APR. On the NASDAQ. So I think that we're going to get a pretty decent sized retracement here, or you're going to see these push up, and I would favor the former rather than the latter. We're going to talk about how impressive the S&P has been this year, and yet we are just dominating it with our asset allocation model, our ATM program, the asymmetric trade management approach to passive investing. If you want to do better than the S&P, but you want to do it at less risk, we got something maybe you might be interested in to take a look at. We look at last week's sector rotation, and you do see what I have been looking for. And that is this massive, massive strength that we have had in the tech sector starting to wane. It's not huge. It's not massive right now, but you're starting to see these tech companies starting to stall out. They're not really rolling over right yet, but they are starting to stall out. And again, we've got Microsoft, Google, Amazon, Meta, all reporting earnings this week. I think that's the story for this week is what does tech do? And based on what tech does, I think that's what the market does for this coming week. We look at, I don't have the past 2 weeks up here. I just put last week's up here because I think it's just pretty indicative of what we got last week, which was just kind of a blasé week. A few things up, a few things down, but it was pretty much just a flat week overall. This is a week when you look at a heat map like this that you can almost immediately say, if you didn't know anything else about the marketplace, a little bit of consolidation probably going on here. Markets probably getting ready to expand. There's only two markets. We don't care as traders if the market's up or down because we trade both directions. What we do care about is, are we in a consolidation mode or are we in an expansion mode? We've been in consolidation mode forever, it seems like, and that never holds forever. At some point, we're going to get some directional bias. We're going to get some directional movement here. When? I don't know, but it's coming at some point. You look at, this was 2 weeks ago. This is last week's numbers. Again, a whole lot of nothing. Last week, we saw that there was about a 55-56% expected move in the S&P 500. Insanely low. Insanely low. Well, that's what we got. We got a whole lot of nothing. A lot of very erratic days, very, very tough days to trade last week. And at the end of the day, nothing really changed. Hate to tell you, we're kind of on track for the same setup this week. We'll look at that in just a second. Put call ratio, it's an indicator of, whether or not we are structuring, setting up a little bit more bullish or bias in the market or bearish in the marketplace. Still a little bit of a bearish bias overall on the put call ratio. As we look at that, S&P 500 right now is at 4133, and you can see a couple things. Number one, you can see that there is a lot more hedging coming in on the put side than the call side, maybe indicative of the thought that I have expressed that maybe we are a little bit too high, maybe we are destined to roll over and come back down a little bit. Where are those levels at? Well, 4,100 still continues to be a decent level, a big level, but it's the 4,000 level that is really, really substantive. And that's 130 plus points away from where we're at right now. We could get there in 1 or 2 days if we had a decent catalyst. I don't see one on the radar right now, but you never know. We look at the expected moves last week was just abysmal. It was abysmal. And that's basically what we got. We didn't get any movement at the end of the day or the end of the week. This week doesn't look a whole lot better. So in terms of premiums, if you are an option seller, well, there's a little bit of a skew as we've just looked at there. There is a skew to the downside, and you can get some premium in this marketplace if you are willing or interested in playing the put side of trades. But in terms of just overall credit trades, it's not the easiest market. It's not the easiest market. I said that last week we had successful days Monday through Friday. It might be the best week we've ever had in the trading room. I don't know that we bumped our net lick up very much, but every day we bumped it up just a teeny tiny bit. And to have the week that we had with what was given us and what we had to work with, it might be the biggest success we've ever had. I don't know. It was a tough week. And unfortunately, I think we're probably in store for the same situation this week. We look at the fear, greed, sentiment reading, and, obviously it hasn't changed much from week to week because nothing's really changed in the marketplace. So that kind of makes sense, but we're still a lot more towards the greed than we are the extreme fear area. This is the area where we like to come in and buy. Now, I will say in terms of extreme fear, we are building some positions in the regional bank stocks right now. I think that there is going to be some continued fallout in that area, and you may still see a couple of banks go out of business. But I also think that there's some 30 to 45% potential rebound in some of these issues that have been beaten up, but maybe were the babies that were thrown out with the bathwater. So there is some extreme fear out there. There are some areas that you can find some distressed opportunities to jump on. They're few and far between, I feel like right now. Key news items, key news catalysts for this week that might potentially drive the marketplace. This is important for us for two reasons. Number one, obviously, we want to be able to know what we're up against during the week. If we have an FOMC announcement coming out on a Wednesday, for example, we build our whole trading day around that announcement. We time our trades before it and after it, and it is our entire focus. So it's obviously important to know what you're up against and what's coming in the marketplace. But in addition to that, Tuesdays and Thursdays are our designated days for scalping. And last week, I just said it on Monday, and I will say it again this Monday. I thought it was going to be a tough week scalping last week. It was, and I don't see it getting much better for us this week either. But that's how scalping goes. Some days are amazing. Some days you think you just wasted your time. So we'll talk about that a little bit more in detail. But not a lot of catalysts from a news standpoint this week. Once again, that could potentially really be a driver for this marketplace. We look at our updated performance week to week, year to year, and over the last week here, we are up now to 84 days of trading opportunities on the zero DTE strategy. I wouldn't say it's our premier strategy, but we do them every day, and people love them. People love the zero DTEs. Of the 84 days that we have had to trade this strategy this year, we've done 138. We are almost every day, getting at least two shots at the zero DTEs. And that has been a big part of our success here. 138 total trades, 134 were winners, 3 were losers. We're in an NDX rolled trade right now, 98% win rate. I don't know anybody's got our numbers out there on zero DTE. If you like zero DTEs, I don't know that you're going to get a better shot at it than what we are throwing out there right now. Pretty impressed with our own results on zero DTE. 4 DTE trades, chugging right along, pretty much what we would always suspect with these trades in terms of win-loss ratios, ROIs, etc. We had a phenomenal week last week. We were able to pull both of our 4 DTE trades off early in the week, and both of them surpassed our weekly income goal expectation, or hope, rather, I should say, not expectation, hope, of 10% return in the week. We were able to surpass that on both of them last week. So, just, fabulous. When you can make 10% in a week, we're very happy with that, with a win rate like that. Our IWM Millionaire Maker, we've had 17 total trade opportunities. We do tend to try to maximize those trades, adjust those trades move and manipulate those trades around a little bit. Usually halfway through the week, maybe a Wednesday or a Thursday, we initiate them on a Monday. We take them off on a Friday. Midweek, we try to maybe maximize them a little bit. That's why out of 17 opportunities, we have actually traded 24 times. All 24 of those have been winners. You got to go back over 3 years to see a loss that we have taken in this trade. This is a trade that has been clocking in year after year after year of about 50% a year ROI. We are on track this year for close to 60%. Obviously, we're still very early in the year, but to say that I am absolutely in love with the IWM Millionaire Maker trade, that's a mild way of putting it. I love that trade. I love that trade. Pairs trades, we booked another winner finally. So we're up to 16 total trades. 14 of them have been winners, still working 2 of them. We're going to try to work those 2 a little bit more aggressively this week so that next week we can add another 2 or 3 pairs trades to the mix. Those have been obviously the pairs trades, I will say, are probably one of the best risk reward trades you can do. We have never had a single losing pairs trade ever. And these are trades that come in on average. We had a couple that were like 1.1%, 1.2% returns. Most of them are 2 to 10% returns. So also you can do them with you can do a pairs trade for $200 in a lot of cases. So you don't need a lot of buying power for those trades. Bear market strategies, we haven't put really any together here in a really long time. It's probably been 6-7 weeks since we've done one. Simply because the market's been pushing up. But I think we're getting to the point here now where we can start looking at some of these opportunities. So we'll be looking at adding to that here soon. The stock market millionaire maker, this is the same strategy that we use with the IWM up here, but we use it on equities instead of the IWM index. Right now we are using PayPal, PYPL, and Netflix, NFLX. And both of those have been fantastic for us. We are on track on both of these to be tracking for anywhere between 40 and 90% APR for the year. Pretty happy with that, especially this part. That's kind of the nice part. Very consistent trades. Positive Vega DIA ladders. These have been super easy for us. If you look at our DIA Positive Vega ladder trades, it looks like we are the most amazing traders in the world and we're just rocket scientists. That's just because the diamonds haven't gone anywhere this year. So it's just been a really easy trade for us to trade. It has been averaging about 9% return for us. I'm sure that will change at some point. I'm sure that we're going to get some volatility into the industrials. But so far this year, it's been one of our easiest trades. Set it and forget it, pretty much, for us. Scalping this last week, told you I thought it was going to be a challenge. Yeah, it was. I had a $400 or $500 profit or something like that going on Tuesday, and of course just continued to push until I was down $200. And then Thursday could not make any progress. Little wins here and there, not really a lot of losses, but just couldn't really build any momentum. So at the end of the week, I probably would have been better off working at McDonald's for scalping. But that's how scalping goes sometimes. When you have the days that you're just knocking down that $500 to $1,000 a day, and you do it in a couple hours, it's the most amazing thing in the world. The volatility will be back. Volatility will come back in the marketplace at some point, but we are going to continue to look at scalping opportunities this week, Tuesday and Thursday. Double diagonals, dragonflies, zebras. We haven't really had the IV to do a double diagonal. We haven't had the directional bias to do a zebra. We have been doing dragonflies on BA, Boeing. We needed to get through earnings on Boeing. We needed to get through this most recent announcement that the 737 Maxes are, surprise, surprise, once again, having problems. But we're through that now. So we will probably reinitiate that trade this week and come back and we'll have a 10 of those working. Those have been somewhat challenging trades to trade this year, but boy, they've been amazing. Really good ROIs on those trades. The Theta Ferry $100 trade. Very little action with this over the last week. I think, traded this. We didn't get one on last night, Sunday night, which we usually do to start the week, and that was a CME quote issue that put a lot of brokers down for the evening. And then I think maybe we got two. Of 5 opportunities during the week last week. We got 2 because the premium has not been there for the Theta Ferries. But we were still able to knock two down. And, that's $200 more than most people have, I guess, if they don't have the strategies that we have. 75 winners, 1 loser. It's tough to say anything bad about a trade that can pretty consistently drop 20 grand a year into your pocket overnight. It's been pretty good for us. The gold ladders. Gold ladders are actually starting to work for us now. We are 3 weeks now into actually putting some money in our pocket with our gold ladders. And that's partially been because of the put spread that we've added to it. But I love it when you have a trade that you set up, put your idea in place. You're like, not quite working out like I hoped. And you don't give up on it. You just adjust it. You fix it to where it needs to be. And that's what I think we've done with the gold ladder. It has been a good trade for us. After, 3 months of just kind of churning and not really going anywhere with our gold ladder, we now have 3 weeks in a row that we've been bringing actual profits in, booking profits, putting that in our pocket. This week looks to be another good week for us. So we'll continue to look at that as the week progresses. I don't think we have any scheduled changes on the books on the docket for this week with our gold trade, but it looks pretty solid. Pretty happy with how we've been able to alter that trade over the last 3 weeks. The overnight vampire trade, we had an overnight vampire trade on Thursday of last week, and it ended up being a massive winner, 14% return overnight. That's the good news. Bad news is I put $1,000 into the trade. It looked like an amazing setup. This is a trade that at times I've put $100,000 into, but the risk reward ratio, meaning how much money we would need to throw at that trade overnight to hedge it if it went against us, was disproportionately large. So it looked like a good trade. It ended up being a good trade, but we want to trade well. That's one of our mantras. We want to position size. And so I position sized as small as I could, which was $1,000. So great trade. Not a lot of actual cash coming in, but hey, 14% is 14%. We'll have another one of those next month. Oil ladders, we booked another loser on our oil ladders. We're down to 20 winners out of 4 losers. This is a trading strategy that brought us in almost 100% annualized rate of return last year. I still think we can get there this year. But these 4 losers that we have booked, not consecutively, but over the last maybe 8 weeks, have knocked us back down a little bit. But of all of our ladder trades, our oil ladder has the highest ROI potential. So it only takes a couple of winners here or there to boost us right back on track to sort of shooting for that goal of about 100. That's kind of our goal, is about 100% a year. Again, no guarantees, but the potential certainly there with the oil ladders. The in the money cover trades continue to be money. They are just fantastic. They have been absolutely amazing. We are doing 4 in the money cover trades right now. 2 of them on the short side, 2 of them on the long side. They're amazing. They really are amazing trades. I love the attributes of them. This is impressive, right? I don't think you're going to go anywhere on the internet and find anybody that has better results with zero DTE trading than we do. But let's be clear, it's a day trade. You're day trading. And the risk reward ratio is commensurate with the risk that you're taking, right? There's a reason why you can make 10% a day. There's a reason why you can pull in $1,000 a day on a $10,000 bankroll. And that's because of the risk reward ratio. This risk reward ratio, I love it. I mean, it's been great. It's been great. If you haven't watched our training video on this, check it out. It's on the YouTube channel. Broken wing butterflies, we did one, and we were able to book a profit on that. That worked out okay for us. The premium SKU has not quite been there for us to be able to do these, so we haven't done too many of them, but we did add one more to our mix last week. Our short portfolio, starting to book a few profits in this portfolio, 32% ROI year to date so far. BBBY, Bed Bath & Beyond, is in our short portfolio. They're declaring Chapter 11 bankruptcy over the weekend. Fantastic for us. Just absolutely fantastic. That is a portfolio that, again, continues to outperform. And I think everybody, if you are a prudent, savvy investor, should have some segment of your hard-earned money in a short position to not only make good potential returns, but also hedge your long positions. Our XSP Fly portfolio, haven't added to that last week because we just haven't had the focus on it really, but we'll get back to that this week. It's been a fun trade, and it's a trade that we never ever risk any of our personal principal in the trade. We only use profits. So it's been a fun trade to do. The ATM program, the asymmetric trading method. This is our investing passive asset allocation model. It's about investing. Takes 5 minutes a day. It's not about trading. We are just crushing it in there. We are crushing it. We blew the market away in 2021. We blew the market away in 2022. So far, year to date, the market is screaming. That's an amazing performance for the market, up 8.2%. Yeah, we're double that. we're basically double that. So to say that I am absolutely thrilled with our passive investing approach, it doesn't even come close. It's been amazing. It's been amazing. So anyway, if you want to come trade live with us in our live trading room, trade all of these strategies that we talk about each and every week, you can do that by going to try0dteforfree.com. You can come trade with us live for 7 days. Talk to people in the trading room and say, hey, is this really as good as Scott says it is? Ask them what their opinions are. I think we are the #1 live trading room online today. So you can come check us out. We've got a double your money back guarantee. If you go through our 4 hours of training, if you sit down with me in a one-on-one Zoom session and we strategize how to implement this in the best way possible for you, and then you follow up with me on a daily basis of what your results are, and at the end of the first month, you go, I don't think this is the most amazing trading room in the world. No questions asked, boom, 200% back on your first month's subscription. There's zero risk here, guys. If you want to look at more of an investing approach, more of a passive approach, more of a approach that is focused on risk management and only takes 5 minutes a day, well, that's our asymmetric trade system. You can go to tryastforfree.com. You get 2 weeks of a free trial there. Looking for better returns in the stock market with less volatility. Finally, if you want to come scalp with us, you can go to tryscalpingnow.com. We scalp every Tuesday and Thursday with a live Zoom feed. We try to make $500 to $1,000 a day. That is our goal. We have been pretty successful with that. Last week, not great. Not sure this week's going to be much better, but it's a great thing to add to your trading arsenal. So with that being said, guys, I appreciate all of you. Thank you for checking in. I hope you have a good trading week. I hope we see you in the trading room soon. Take care, and we will talk to you soon.